Hey, everybody. This is Dan coming to you somewhat alive from Japan. Chugging along here, and this is another exciting edition of the mainstream. And you know how we always do it. Every time we say mainstream, you take a shot. So those of you who need a reason to take a shot, you're gonna. This is it. This is it. Anyway, and that can be interpreted in many different ways. Okay, you could say, literally. You can say proverbially, and take a shot at success. Anyway. We're not going to go into that. You know why? You know why? We have a very special guest for you today. His name is Chris Lane from Kinka Gold. Now, some of you may have heard. I mean, I hoided through the grapevine, and which is Twitter, I guess, and other sources that Kinka has recently been working it out with and getting things moving with Emergo of all peopleses. And so again, this is super exciting because, like I said, it's Emergo, so it's a founding entity working with an RWA project that has been tokenizing gold. And okay. So Chris, first of all, say hi to everybody.
Hi. Yeah, thanks for having me here.
No problem. It's my pleasure. We were I've known you for quite a bit. And a fun fact about Chris is that Chris is actually an OG Ergonaut.
That's true. That's true. At one point, we had the largest mine of Virgo at one given instance. We even launched a club that originally was targeting Ergo.
There you go. Yeah. So this guy is an OG in the ecosystem, an OG Ergonaut. Awesome to have you. So just, first of all, tell the people a little bit about yourself, your humble beginnings. Let us know what's up.
So, I mean, my humble beginnings is really all started in the northern island of Japan, up in Hokkaido. I was there for about 11 years doing real estate in a small ski town called Niseko. That started booming, and I started building up a client base of very wealthy individuals around Asia. When the big earthquake hit, the Fukushima earthquake hit, I moved back to Hong Kong and launched my own real estate platform alongside with my big investors that were going into Niseko. The platform is called Majime Partners, Majime Capital. It's kind of a joke. If you speak Japanese, it means somber capital or something like that. Yeah. But most of my partners know we're not that serious.
It's serious. Like basically, it's like for reals. So it's a really great name. I love it.
Capital. No. So basically, it's a platform I built to cater to high net worth individuals. And I'm like, instead of buying a ski condo that you're going to use once a year, why don't you back me and let's do some more serious big boy investment? So we've been doing hotel, hospitalities, residential, pretty much anything. My niche is Japanese real estate market. And that's how I got to know mining, actually. So some of my partners in Japan, you might know them, Rhett and them, they pulled me into it. And they said, Chris, you know how to manage cash flow. You know how to pull a fund together. Why don't we put some money into mining? So we were GPU mining. We were buying warehouses from K-Buy, from the auction houses in Japan, just hoping that they have a transformer big enough. This was back in 2016 or so. Just mining Ethereum wherever we could when it was like $100 an ETH.
Yeah.
We scaled that up pretty rapidly. We went into Atlanta. We went into China. We ultimately settled in Sweden. But it was the main thing where my investors are kind of conservative investors. They don't really want to splash, but they don't even know what an Ethereum is. They don't want to buy Ethereum. But they like that idea of buying a real world asset and generating this digital currency, as long as I manage the cash flow. So it was my job to get the investors in, find the graphics cards, handle the logistics, get them all over to the various parts. And then our ground team would be the ones actually sitting in the dark mining these bad boys. But my core investors, they like that margin between your cost of mining versus what your value that you're creating. So that was how I really got sucked into it. Has always been the link between the real world and turning coins to cash, basically. That's so on the real estate side is how I got linked up with the current guys that I'm working with now. we actually borrowed money from one of the subsidiaries called Crowdbank, and Crowdbank knew that I knew how to, again, turn coins to cash, and they knew that we were building in this space. He's like, Chris, why don't you meet up with the parent company, Unbanked. At the time, they were called Daiichi Shohin. And Unbanked is a listed company in Japan, and they had been trading gold since the 1972, I believe. They've been listed since 1990s. From my research, they're one of the bigger gold traders in Japan. They're not huge, but they have about a monthly volume of 5 million US gold bullion just in and out per month. They're not brokers; they're just an absolute trading house. So with Crowdbank's technical financial kind of advice, they launched this project called Kinka, where we're putting gold into the Loomis vaults and tokenizing it. But I think the biggest difference between our project and other projects is that there's no fees, because we don't really mind about the fees. All we care about is the velocity of money. We want to see traders trading it. We want to use this as a new sales channel for our core business. We can buy bullion at any given moment. We're not a huge company. I guess the net assets are around 50 million US, or sorry, 5 billion yen. That's like 35 million US. At any moment, we could put another 10, 20 million market cap on Kinka. But really, more than anything, my job now is to bring Kinka out to the open market and see who's interested to put gold into their portfolio by way of a tokenized asset. That was a long-winded. I think you're muted.
I'm not really muted. I keep saying this to people. I'm just speaking to it telepathically. That's why you knew I was muted. So right. ha.
I did. Yeah. You beamed it into my head. I got that transaction.
I'm really good at this kind of stuff. I'm just. Don't worry. I got this covered. This whole mute unmute thing. I've been doing it for years. Muting, unmuting stuff. This thing, that's a microphone, right? That's a professional word for it. Mike. You spell it with an C, not Mike. Anyway, well, sometimes do. But anyway, getting back to what you were saying, right? So one of the biggest things that I've always been kind of throwing out there into the community, into the space, into just kind of like the think pool of this entire industry is that you really need to have mainstream. We lack as an industry, and especially and RWA as well. We lack real mainstream business sense that is really needed to kind of drive this technology. And what I love about RWAs is that it's actually it touches the real world. It's something tangible. It's something that can be kind of put out there and shown to people. And basically, the technology makes it better. Technology helps it move better, helps it be more portable. And that's what I think is so great about what was companies like Kinka and what you're doing is that you have this and you're not just kind of like out there, okay, well, let's see what happens if we make a gold token. I mean, okay, but there has to be something more behind it. You have a strategy, right? So let's kind of dig more into that if you allow.
I would love that. We actually I've been working on this roadmap for now 3, 5, 6 months, and all of our unbanked investors, they've been hounding me on Yahoo Finance. They say, "Oh, come on, get the roadmap out." We know exactly what we want to do with it. It's just a matter of getting from point A to point B. As a listed company, we are heavily regulated with what we can do and what we can say. But the partnership with Emergo was really the launch pad to get us into where we want to get to. So I mentioned trading already. Obviously, we do want to find traders in the crypto space. We want people that have blown, huge amounts of profits. When they take those profits off the table, we don't really, I think there's an argument to say, why don't you hold it in a gold token? Maybe not Kinka, whatever you want, but put your investment into gold versus going long on the dollar, especially now. With all the quantitative easing.
Well, the thing about that is, Chris, and I think that's actually something that we see quite a bit across the industry is that there are a bunch of gold-backed tokens, right? But then what do you do with it, right? So where does the liquidity? How does it move? What I really like about what you said is that you're looking for traders. You're looking for people to trade this stuff. That is so important to have, because if you don't have that, I mean, look, tokenizing something like a precious metal or even an industrial metal, I mean, the actual technology is trivial. I mean, it really is. It's all about the business. It's all about the business behind it, and that is what I think is very important. Is what I think why your project is going to be successful, and it already is successful. I mean, you're basically you're not like starting from that. You're literally just adding that to an already successful business model. So that's really great. Now, what I really kind of want to pivot towards right now, and then as far as the conversation goes, is so I'm in Japan. You were in Japan. This is a Japanese company, right? Correct. Which is great. I mean, we got a huge community out here. Cardano started out here. Asia, in fact, is prime for this kind of stuff if properly positioned. Now, why was it important to have this in Japan? Why specifically a Japanese company? So basically, what was the growth potential of doing this with a Japanese company, just in general?
So I want to get back. The main driver behind this is kind of the amalgamation between unbanked and crowdbank. Okay, crowdbank is kind of a fintech company. They crowdfund for moms and pops. They lend money. They know the technical ability. They have technical abilities for lending and stuff like that. They married that technical kind of background with a very, very traditional gold trading company. Okay, so that's the marriage first. They had the idea to bring it out to bring out this gold-backed token to open up the new channels. So now I got brought in. What was it? I guess last June or so. And they were unable. So as a Japanese company, it's kind of backwards. They had the project first in Japan, and they asked me to join to help them bring it to an international level. Now, the biggest hurdle that I'm having now is that because unbanked, 99.9% of their investors, if not 100% of their investors, are Japanese. So we are highly regulated. We cannot sell Kinka tokens to Japanese. We cannot market in Japanese. We cannot do anything. So, and especially as a Japanese listed company, as a public company, we are heavily regulated. We cannot start selling our tokens until we are listed on a Japanese regulated exchange. There's a bunch of them, the 9 or so.
The whitelisted ones with the JFSA. Yeah. That's I've been through this with Cardano back in the old days. Yeah.
So we need to get the global market. We need to get the global volume going. We need, like I said, we need to find those traders. We need to find utility. We need to get more and more people trading it offshore, and that's how I got brought in. But I think more back to the Cardano is a Japanese product and Kinka's a Japanese product. They very much both are, but both of us are building overseas as well. Cardano, and especially Emergo, they have been ultra supportive. I mean, we've had a relationship with Kodama-san since the beginning. My group is actually one of the pre-ICO investors. We went to the Osaka office and bought our rights to own ADA with Bitcoin. That investment owed us 8x by the time Cardano actually launched. It was a great investment, of course. But we have had long-term relationships with Emergo more than anybody. And a little bit with the IOHK as well at the time. Now, when that was more so when ETC was launching, we were big proponents of ETC with our mine. So why did we go to Cardano, and why the two? So Cardano is one of the most successful, if not the most successful, Japanese blockchain product. We are Japanese; it makes sense to market there, but we also explore. We looked at Base, we looked at Polygon, we already on ERC20. We're already listed on 3 exchanges. Why do we bother to go Cardano native? It's mainly that support, because we're a traditional kind of finance company. Nobody really has ever heard of Daiichi Commodities is our old name, nor Unbanked, which is just recently rebranded. Nobody in the blockchain ecosystem knows us. There's probably no trust. They don't really get what it means. But to partner with a founding entity is really strong for us. And we hope that bringing an institutional listed company to their kind of stable would also help to promote their new project, which in fact is a new stable coin. So that marriage between USDA and Kinka is really what we want to work on. So
yeah,
bringing
and
out,
that's also, sorry to interrupt you there, Chris, but that's actually, I just wanted to kind of accent that for the viewers. That's very important. Again, it's not just about one product, right? So it's not just about, well, let's just throw this up on the wall and see if it sticks. Let's just, oh, well, we'll just, you're not just kind of throwing it out there and saying, let's see what happens with Cardano. There is actually, there's a concert play here, right? So you're working with Emergo. Emergo has a stable coin that is also coming out that is basically going to be a driving vehicle potentially for Kinka, for the Kinka token, aside from which you have other tools, right, in the Cardano ecosystem in EUTXO that can really give various different opportunities for for supporting a project and supporting the token, aside from just kind of like, again, throwing it up there, and just telling people trade it, trade it,
yeah.
because there has to be a flavor to it. And I think that is actually kind of the secret sauce. There is this is the deal itself, the business itself.
Yeah, I mean that's the main thing we're really going for here, is to try to bootstrap ourselves up within the Cardano ecosystem. They've been so supportive and so welcoming to bring our project to them, and we hope that there's people out there with ADA or anything else on Cardano native that are interested to put a little bit of their portfolio into gold. And the DeFi positions are super interesting to me too, because once we get into DeFi, and once there's a big enough market, once the market makers are working, then we can start getting into the lending protocols as well. We'd be very happy to team up with lending protocols that can take Kinka as collateral, and then anybody that owns Kinka can now start generating a yield by putting it out there and letting them go to the dexes and then swapping it. Because I don't think people are really going to trade Kinka to any other meme coin or anything particularly, but they don't mind holding Kinka as a collateral and borrowing against that as a position. You're kind of juicing your yield in that way.
Yeah, I mean, it's a hedge. It's a hedge. It's actually, it's again, one of the most attractive features of RWAs is that hedge against a real world asset. Now with gold, you know what this asset is. It has a long history of price action. There are, it's easy to move. I mean, it's a liquid asset, so it only makes sense. And then when you add to when you add the blockchain aspect to it, it kind of, again, gives it that portability. So again, this is a very, very interesting vector. Now, for what you're saying, and well, I'll let you finish up, but I just kind of wanted to touch a little bit on what I was saying, basically that gold has been a traditional store of value for a long, long time, and so how big do you think the tokenization opportunity really is? So tokenizing gold, right? You tokenize this gold, you put it out there, you were just already talking about these opportunities that you have just within the Cardano ecosystem. How big do you think the opportunity here is? What is kind of like what is your 5-year plan or 10-year plan for just tokenized gold in general?
I mean, the gold market itself is what, 23 trillion, something like that. I think that's going to continue to climb as they pull it out of the earth. And then again, they're using it in industrial situations too. It's not just a store of value. How big can this get? I mean, it's not going to be a meme coin that's just going to go moonshot. This is designed to be a stable component, stable investment in your portfolio. It's one of those things you should have a little bit of it. And then we'd hope that everybody just continues to just continuously add it to it. Now, the one thing though, if it's a tokenized gold, different than just being exposed to gold. Yeah, I would imagine I mean, to be fair, it is another synthetic real world asset, so to speak, right? I mean, the ETFs that are out there, there's a dozen of them. They all have fees, and you don't really own that gold. You can't go to their vaults and say, right, I got 25 shares of GLD, give me my gold. But more importantly, it's not even fungible, so to speak. You couldn't go to some marketplace with your wallet and try to trade a gold ETF stock for a candy bar. But with tokenized gold, there is an actual value. There's an oracle that says what it's worth. It's a third party, and there's more and more payment, gateways that are allowing you to just put gold. I could put Kinka in one of my wallets now, and I could be spending that with my credit card, against that gold value immediately. And then there would just be a liquidation event. They would just sell my gold against the DeFi positions, as long as there's a liquid market to it. I think we'll see gold coming in as potential. Tokenized gold could potentially become one of the world currencies.
Yeah, I totally agree because again, I think one of the main issues is, and I always say this with just straight up crypto, right? Um, why are stable coins basically just dominating, say, the Ethereum ecosystem, or why are they so high in market cap? If you look at, just straight up market caps, is because, well, nobody wants to spend even the top grade, even Bitcoin. Not a lot of people want to spend Bitcoin not because they don't trust Bitcoin, but because they actually trust it a lot, and they see it as an opportunity loss. So, like today, for example, I pay you, whatever, for goods, right? So these are not services. These are not items that live within the ecosystem where this is a main currency, right? So if this is actually kind of a currency that's coming in an already existing ecosystem where another currency is dominating, like for example the US dollar, right? So you come into an ecosystem like the US, the financial ecosystem like the US, and you just go to the store and you spend ADA to buy something that is actually denominated in dollars, right? So you spend $1 worth of ADA. Well, to me, that's actually opportunity loss, because I believe that ADA has a huge upswing potential. So that $1 that I spent of ADA could actually be $100 very, very soon. That's how I look at it. That's how many people look at it. That is why not many people will just straight up pay with crypto on a large scale. Now, when it comes down to something like tokenized gold, right, it's a lot more, I guess it's a lot more accepted as currency, just per se. Gold, gold was used as currency for thousands of years in many different civilizations across the world and many different countries, and it's still being used, right? But aside from that, what I really like is the fact that what you said, right? It's not just kind of like this synthetic gold token, right? It's a real currency that can be spent in a real way. Now, of course, there's opportunity, loss and gain there as well if you spend the gold, but gold volatility is nowhere near crypto volatility.
Yeah, I mean that's the point. Whoever's holding crypto or Bitcoin or Ethereum or whatever, it's infinite. You could lose out on 30% in an hour because some news comes out or some government slams it. It's so volatile that it's hard to spend it. I also, these days, I kind of feel like Ethereum is just liquid. It just comes in, comes out. I buy it when I have to. Everything trades in Ethereum. I go buy some Ethereum with my stables and then transact with it. Gold to me should be similar. Bitcoin's been, the volatility is coming down a little bit, but it's still an opportunity loss. And I think the scary thing for gold is that there's only for Bitcoin is there's only 21 million coins. Sooner or later, people are going to start hoarding these things, and then the actual free float is not going to be that much. With gold, they're always pulling it out of the ground. I don't know what's the supply. I'm sure there's a lot of it. But it is very much a stable asset in terms of currency. It would be interesting to see the gold standard come back to all currencies. I'm not sure if the governments and the powers would let it, though.
Yeah, well, so let me kind of put that out there as well. So, and this is a bit of an off question. How would you say, from your expertise in the field, and again, you might not have an opinion on this, but I just want to hear what you have to say about this. Getting back to the gold standard, right? Because essentially, this is what this is. It's a gold standard token in a way. What do you think is the potential of that kind of happening? As governments embrace crypto, like Singapore, for example, or Dubai. Dubai is really embracing. The UAE is embracing crypto more and more. How feasible do you think it is that these economies would come back to the gold standard using the kind of tokens that Kinka, like say using Kinka, for example, as a currency?
Right. So I had this conversation a lot. Is like, what's really the value of a dollar? What's the value of a yen? And people talk to me. I don't ever pretend to be a currency expert or be able to give advice on which currency would do better than others. But whenever you're talking about currency, it's always the value of it against something else. And then there's so much political risk against it versus itself. At any moment, the government can change the inflation rate, can change the Fed rates. But there's a political risk for other governments. You saw what the American government did to Russia when they froze all their bonds, the treasuries. To me, there must be countries out there that will want to treat gold as a safe haven compared to US treasuries. If they happen to mess up in this kind of crazy world that we're in, they may end up having all of their US treasuries frozen, which were supposed to be a safe haven asset. So the political risk on currencies is enormous these days. Gold is just completely separate from all of that.
Yeah, I do. Again, I mean, I have, I think you and I are on the same page here. What I like about this is, like I said, it is an asset that has a very well established market, and specifically, what you offer is something that is truly feasible as a real currency. I mean, it has real utility. This is not just kind of like maybe it's a nice to have. It's a must have, I think. Okay, so let's kind of touch on the other side, right? So we spoke about gold. Why is gold important? Why is it a good thing to tokenize gold? Why is it a good thing to use tokenized gold as a currency? Let's kind of pivot to the technical side of it, right? So, I mean, blockchain is a movement, right? At least I believe it to be a movement, and many do as well. I'm not the only one, I'm not the one who came up with the whole concept, obviously. So, yeah, many believe, but blockchain to be a movement, to be a disruptive force of traditional markets, which is good. It's there was like a line from the Hunt for Red October. It's at the end of it or something. It was like, a revolution every now and then is a good thing. And I think that's what's happening here. I know that's what's happening here. And so, how do you feel that blockchain is transforming the gold sector, and specifically when we're dealing with things like provenance, like sustainability, speaking, what I'm actually also really interested in, and this is something that I've been speaking to several of my friends who are in the aerospace industry, which is also utilizing, a lot of gold for industrial purposes. I mean, how do you see? How do you see blockchain technology aiding and kind of relating the industrial applications of gold?
Well, I've always thought that blockchain lends itself perfectly to basically any supply chain, and especially with gold, where you have such dubious sources. If there was a way to prove on-chain, immutably, never to be corrected, where that gold was mined, when that gold comes out of it, you have some kind of stamp to connect to register that gold in the blockchain. How was that shipped? Who did it trade hands with? Like a deed of every gram of gold. If there was somehow a way to log all of that information to be able to prove the provenance of your gold, to say that, yes, this was ethically mined in any particular place and it was refined. It was absolutely refined at this refinery. We didn't just steal some LBMA hallmark. It was actually hallmarked. And once you can prove that track record, that history of a bar of gold, I mean, I think that's enormous value. I don't know if you're in this industry, but you always hear of some random buyer, some random big trade about who wants to buy $1 billion of gold, and they want to have some process of how they're going to do it. And it's always a chicken or the egg situation where, do you have the money and do you have the gold? But if you had this absolute transparent blockchain that was able to prove that gold really did exist, and I don't think we're there yet. I think we have a lot more work to go. We do what we can, but it definitely needs more. I think there's all sorts of different supply chains. I know you're doing a lot of that too. So we're waiting for your proposal.
No, you know what? It's funny because you literally, I mean, somebody wanting to buy $1 billion worth of gold. I literally went through this before. with somebody
Everybody has, especially in Hong
who
Kong. There's always
yeah,
it's Bitcoin or gold or something, and they have some
it was
excuse.
gold.
They
It
say,
was
"Oh, I'll give
LBMA
you a."
gold. It was LBMA gold, and somebody wanted to buy these like insane amounts.
Yeah.
And
You
I'm
get
just
so
like,
excited, and there's always 25 brokers in the chain, and they're all fighting for 1% commission of a $20 billion
exactly, yeah.
trade.
It's
I've
it's like
seen
a
somebody give
feeding
me a $1
frenzy.
trillion what is it? A cashier's check, a scan of a $1 trillion cashier's check. I'm like, you are joking. This is obviously not a proof of funds.
Yeah. No, it's just like it's the proof is trust me, bro.
Yeah.
That's the proof.
No, I
Yeah.
mean, obviously, blockchain really does lend itself to being able to prove where that gold came from.
So okay.
But we need it at an institutional level. We need the banks to be on board with it. We need the banks to accept that blockchain. We need the Loomis vaults. We need all of the big vaulting companies to get on board with it. We need some kind of centralized, transparent blockchain with a that can't be controlled, by various governments. You want a democratic system with this. Otherwise, if there's ever somebody that has too much sway, then all of a sudden it's not really decentralized anymore. Anybody could push it over. Anybody could cheat, and they could say, "Oh, that transaction happened," when it actually didn't.
That's exactly it. Yeah. That's really look. It actually touches on and please, I want you to finish your thought here, but just kind of throw something else in there. What you just said actually kind of hits home, and the next thing I wanted to ask you is about the scrutiny of real world asset, and so especially. How important is it to verify these reserves, and how does Kinka in particular do do verification of reserves? That's very important.
So we right now, as a listed company, we have a auditor called Frontier. They're in Japan. They audit all of the listed companies' books. They audit all the subsidiaries. They do all of the auditing. However, the gold is not held in Japan. That's a small hurdle that we have to cross right now. We do get it audited by RSM. But for now, they're not allowing us to put it to the public market. And the reason that they're saying is that because they're not our in-house auditor, they won't allow us to let their gold audit report go public and go transparent. We are able to show it to all of the exchanges that we list on, all of our partners, anybody that needs it, all of our market makers. They're able to see that gold. But we're now working on a new system with the Mergo, where there's a three-party issuance private key. So Fireblocks, Emergo, and us would each be able to see that third-party audit before new gold is issued, and then we have the monthly storage receipts as well directly from Loomis. But I do have as soon as we can cross that hurdle, probably on the next tranche of our gold putting in the vaults, I would like to see it put onto the blockchain itself, where there'd be a letter from the listed company warranting that this gold really does exist, and that's a heavily regulated company by the Japanese FSA. We would have the third-party audit report and the actual the vaulting receipts from Loomis.
So
I think the two big boys, they do it very well. They make their monthly reports. That's Pax Gold and Tether Gold. They're on ERC20. I think they're around $500 million market cap right now. They've done very well with that. They do publish their auditing reports. I like that. I'd like to get there.
So what do you think? I mean, what are your thoughts on going back to Providence, right? So, how how much easier would it be, or how much easier would the process be made with the use of things like IoT devices, for example, to verify reserves?
Touched on that a little bit. The idea of putting a scale in the actual vault and making that visible from the public market. People could see it with the camera. The gold hasn't moved; it's there compared to the actual weight that's sitting there. If we could somehow log that information on a minute by minute basis, that would be super interesting. Yeah, I'd love to see that.
Yeah, and I think that actually, on-chain proof of reserves. I mean, of course, it'll take some legal framework around it to be deemed legal, right? But I think that it's actually very, very important because it is an immutable way to audit these things, right? And it's a real-time way to audit, because still, even if you have an auditor, right, an official auditor, they could be a very well-respected company. You're still kind of trusting somebody, right? So having a you still have to have a relationship of trust. But if you are using something like blockchain technology and IoT and basically oracles, you could have a decentralized, trustless environment that could serve as an auditor, and then can be audited itself. You can audit the information on that. I mean, I think that could be a game changer. I mean, do you agree with that, or do you see some
definitely. I do.
holes with
We do
that?
need to see it. Whatever technology comes out, though, I think we need to see more adoption from the traditional finance player. We can't just assume DeFi is going to take over the world. I think that's a bit naive to believe like that. But you do need to work with the banks. You do need to work with the things. And once there is some sort of blockchain that is adopted by all parties involved in this industry, in this sector, that's when we can really start seeing a lot more just trust in the system itself.
Well, so the DeFi actually, this is kind of a pet peeve of mine. This kind of image of DeFi as it is today as being anything that's even remotely sustainable. It's not. It's really not. DeFi in its current state is bullshit. I mean, it's not sustainable. Well, look, it's real. I mean, it's the reality of things, because there is no mainstream. There's not enough. Okay, there is some. I shouldn't say that there is some, but there's not enough mainstream thinking about how DeFi can be put outside of this blockchain bubble that we live in. And it's not just meme coins and whatever, and liquidity sloshing back and forth. And so I think, and I strongly believe, that the way for DeFi to go mainstream is through RealFi and through, I mean, it has to be a hybrid solution. Like you said, you have to work with institutions. You can pick which institutions you work with. Not all banks are evil. Because some have that perception. Not all banks are evil. Some are ethical, and you can work with them, and they're actually going to be very much on board. There's neobanks out there that are very much in the know and really, willing to work with DeFi ecosystems. And something actually that we're building is on Palmyra is trade DeFi. So basically, it's a combination of trade financing and DeFi offering liquidity for trade financing for real world assets. So essentially, this is trade financing for farmers, for miners, for anybody who's out there, basically, creating these commodities and generating revenue from that to have. This is a sustainable way to do it. I mean, what you have is a sustainable way to do DeFi. But yeah, absolutely. I mean, look, I know it's a little bit harsh, but I really do believe that the way that we have that what DeFi is today is BS, and it needs to change. And that's how you change it. You change it with assets like yours. That's just how I see it.
Yeah, it is a struggle to bringing in a traditional finance company into DeFi. We had numerous board meetings discussing the actual merits of going into a DEX pool or putting liquidity onto the. I mean, they look at it like little kids in a basement going playing with their little NFT figures and stuff like that. They don't see it as a real viable way to trade. But when you look at the volumes of some of these DEXs, is enormous, and it's not just market makers. There's people really trading on these things. There's arbitrage traders all over the place, even between DEXs. You can bot this stuff now. I wouldn't say DeFi is bullshit. I think they've got a long way to go.
Well,
I think sooner or later,
current state it is. I don't think that the concept is bullshit. I think the concept itself is actually a great concept. But what we're doing with it today is BS, and we should not delude ourselves into thinking that this is a sustainable thing. Doesn't matter how many billions of TVL or whatever other glamour metrics we're gonna get thrown out there. In the end, this is a closed ecosystem that that is basically it's still an echo chamber. And that's what I think. That's what the problem is. So I don't think that the concept is bullshit. It is a great concept. It's just being executed poorly, I think.
I think we're seeing more and more traditional finance guys dipping into it and figuring out that there's a margin to be had there. Whenever there's money to be made, the big traditional finance guys will find their way in, and they'll make it more and more accessible to the global market. There's people that don't know crypto that kind of want to get in, but they'd rather do it with the help of an institution. And there's people that don't like institutions at all, but they kind of see them as a necessary evil, especially when you're talking about fiat gateways. When you need to have cash in your pocket to pay the taxi, you still need a fiat gateway, and the banks are still the gatekeepers for that.
Yeah, I mean, yeah. Well, so what you said right now, right? So you have the bigger players, the more traditional players coming in. And look, for these guys, it's actually, I mean, it's just about, it's all about risk profiling, right? It's all about risk profiles. They're not going to come in to on some random meme coin just because some YouTuber said that it's going to go 100x tomorrow. That's not how these guys work. If they're actually coming in on assets, they're actually seeing these assets in a more traditional institutional kind of goggles and saying, yeah, okay, so there is actually reason to expose yourself to this risk. And so also it's very interesting because it shows you some evolution in the space, right? It shows you that these guys, these guys are coming in because there is some evolution, because there's some more stability there. But again, like I said, the way all of us inside the blockchain kind of, the what sometimes is a bubble, see DeFi and how the change, or again, it's like, well, your TVL is not as big as my TVL, and well, like I just don't think that's sustainable. I think that's BS, and I think we should do better. And then we should look at these guys, that are coming in there from the more traditional fields, and looking at what are they looking at? Why is it interesting to them? What you said is very important. That institutional players need to come in so that retail feels more comfortable about coming in. I mean, and this is not just banks. I mean, this is with everything. I mean, from living in Japan, and this is kind of a bit of a stretch of an example, but it's still has it's in the same spirit. How Japan in some ways is very advanced, right? But still, most people will believe what's on TV or in a newspaper over, like, if it doesn't matter if Jesus came and told you buy Bitcoin. If a newspaper tells you to buy Bitcoin, they'll believe that over anything they see. And this is this is a and not everybody, but many will. And I think this is actually kind of a paradigm that we need to understand, that retail still needs a more comfortable way for entry. We cannot go to them and say, just don't worry about all this. We're here to disrupt all of that and just come on in and trust us. Everything's going to be okay. You need those. You need those on ramps, and you need those rails. And I think those are very, very important.
Yeah, I mean, there will be a day when any mom and pop can log into their bank and buy nearly any of the top 100 cryptos just within their little banking. I don't want to mention any banking names, but within your platform there, your bank platform, your online login, you'll be able to see your cryptos. I'd like to be able to believe that those banks will also allow you to withdraw those coins to your own private wallets. I'm a big believer of non-custodial. Not your keys, not your coins. But it's a little bit early for the retail buyers to just expect them to get a ledger and then figure it out. And the possibility of a total loss or a wipeout or getting hacked is still too enormous for the average buyer just to dip their toes in and try it out.
Yeah, absolutely. Listen, let's maybe touch on something else here, and going back to a more decentralized structures, right? So we just talked about how it is important to have kind of this go between traditional and on chain, unbanked, decentralized way through kind of these aggregate solutions. Now let's kind of touch on the other side, right? So let's touch on the decentralized side, and more specifically on DAOs. So we had a conversation before around the roles of DAOs, right? And especially in context of real world assets, right? So how do you envision this? How do you envision a DAO, playing a role in a project like yours?
DAOs to me are the ultimate democracy, provided that their coins are distributed fair enough. It's not just one founder that he holds 90% of the shares and he's basically 90% of the DAO. The governance that comes from a true DAO, if you look at something like Bitcoin, I would hope that it's getting closer to decentralized enough. How would it apply to us? Because we still need it at this point. We're not at the point yet where it's just fully automated, where we can just trust everything to the DAO. But how I'm trying to treat the DAO is that we're thinking about building up a treasury for every time that we issue new tokens. We would put a small percentage of those tokens into the DAO's treasury, and anybody that holds those DAO tokens would be able to vote. They'd be privy to those private audits that are currently private right now. They would be able to be privy to all the information, and then all the DAO token holders would vote: is this legitimately gold backed? And then they would vote, and then if they voted yes, the tokens would be issued, and we could start creating a bit of a governance system around that. And I think that's where you would build all of the provenance and all of the IoT devices and things, not within the actual stable coin itself, but you would need some kind of governance system in order to maintain and manage all of that. And then you would need that same system to have a treasury and have a budget in order to kind of build that whole protocol, to build the infrastructure around what you need to do it. You can't build it all into a Kinka token. When you're talking about the DAOs, I think they do have a role to play with stable tokens. And the first and foremost is that verified? Is that gold really there? Whatever real what it is, there must be. If it's a real estate or if it's silver or anything that's out there, there should be some entity that can vote yes or no. That is a valid asset, and that's a valid token. And then that's in the block. And if that's in the block, you can always go back to it and say, no, that's been verified. It's good to go. Yeah. I think that's from what I'm building so far, that's my best use case for a DAO into our project anyway. I've seen a lot of interesting DAO proposals though.
Yeah, I mean it's never, it's just a way of doing business, and there's no one model that works for everybody. I mean, I was and there are some things for DAOs that some things about DAOs are very super efficient, and some things about DAOs can be a complete stalemate. I was actually I spoke about this on socials a couple of days ago, I think maybe yesterday or something, and one of the guys that is actually building a DAO out here in Japan was telling me that this is it's not an easy thing, because, like, for example, if you have everybody in the as part of the DAO basically sticking to what they want and not really considering other points, right, you can get a stalemate, right? So you can some decisions can be super hard because it's a decentralized way of doing things. And so kind of a new understanding has to be developed as to how to do business, how to get around these bottlenecks. And so again, this is not one, one size fits all. Everybody is different, and there's different use cases for DAOs. I think again, for your project, there is definitely a use case for a DAO. I think, actually, I like what you said about the particular use case of provenance being part of the actual DAO consensus mechanism, or consensus per se. That is very interesting, and that's actually a really good point. I believe that would be important because it is a trustless environment. So in this case, you don't want to put in a bunch of centralized entities into your decision making. You want to have a nice spread of flavor. So yeah, I do agree that this is a great place to have IoT. Now let's go back to DeFi a little bit. And get a little bit more into the real world use case of it, a little bit more into I guess how things would really work if we if we kind of put, if gold takes a much, a much more, a much bigger position in what DeFi protocols do. So, do you see tokenized gold just playing a big role and really stabilizing these markets, and especially, and I know we touched a little bit on it before, but specifically, um, uh, how do you see what are the guts of integrating it into lending, or
Right.
actually, more specifically, actually, something else that I wanted to also get your view on is how it can be integrated into staking if we're talking about Cardano.
Yeah. Okay. So I've got two topics about that staking thing. There's a couple cool ideas I want to bring out. But in terms of just using gold as a stable token, bringing it back to our project, since we are in Japan, you might know that Japan vehemently disallows any stable coins to be traded on the regulated exchanges. They don't want to. They don't want the retail buyers in Japan to be able to buy a USDC or USDT from any regulated exchange. They just don't trust that those dollars are actually in the bank, and they don't want to be the ones to audit it. They don't believe that these bonds that they're holding is safe enough. I don't know all the reasons why, but for now, it's just not existent. However, Japanese government has already stated that they feel that an investment into gold is not the same as buying into a currency-backed stable token. So that's an investment versus just holding cash to them. So our big goal is to try, once we can bring it back into Japan, is to become one of those stable pairs on the regulated exchanges for Japanese to go between ETH and Kinka and Bitcoin and Kinka as a trading pair on the regulated exchanges back home. That's one of our big pushes for sure. Now jumping back to staking, so I see two obvious immediate use cases. Is they setting up our own ISPO. Now that we're going into going native onto Cardano, there's a lot of ADA holders out there that have been staking for years. I'm one of them for 5-10 years now. I don't know how long it's been. I still have my first ICO ADA that's still staked. There's people out there that maybe they just don't want to collect ADA yields. So if we set up the ISPO that we're collecting ADA on their behalf, but we're actually going out to buy Kinka on the market, then people are going to start getting Kinka as a reward for staking their ADA. They don't want to sell their ADA. They don't want to lose out on opportunity risks, but they're also happy to start accumulating a more stable asset in Kinka. The other idea, this is actually kind of formalized, brought out to me first by Vinny of Emergo. Great idea, is that you're able to borrow in real world terms. You're able to borrow against physical bullion. So I'm starting to toy with the idea, and this is going to be a much later phase project. Once we need to get into native first, and once we get into the native protocols, we can start lending, stuff like that. But the actual physical bullion, that has a value on itself. So anybody that has Kinka tokens, I'm envisioning an idea where if you stake those tokens into the stake pool that we set up, that basically entitles us to borrow against that amount of gold in the vaults. And then with that borrowed money, we would find some very safe, some treasury bond or something else that actually generates a yield against those physical gold bars. So we would be able to borrow against the gold, buy some kind of yielding asset, purchase more Kinka, and deliver those back to people that are staking it. And as a listed company, as a big gold trading company, those kind of processes are much easier. So trading gold, I mean, you said it before, the hassle of trading physical bullion is actually quite high. It's not that portable. It's not that accessible. You've got storage fees, holding fees. The average person can't just go and buy a block of gold and borrow against it. But if we simplified that for people, especially within the ADA community, I think there'd be interest. We obviously can't make Kinka out of thin air. We can't just put it in like an ohm fork and start just generating Kinka tokens like willy-nilly, because they are backed by real-world asset. But I do believe that there's interesting ways that we could add staking to our token. Of course, the governance DAO, whatever that may be, that can of course be staked, and you can multiply and accumulate however you want to on that inflation band. But the Kinka tokens themselves still have staking capabilities, I believe.
That's very interesting. It's I mean, we've had the ISPO model on Cardano, and I believe actually it started on Cardano. And it's a great model. In a way, it's actually a great model to either fundraise or to distribute your tokens to more to more holders. I mean, and that's really good, especially if you're doing governance with it or whatever else that well anything really you want to have a nice community of holders. So yeah, I'm really looking forward to seeing Kinka being offered as a staking, a staking reward. I think that's a great idea. I think that's
unique. And that's something we can do easily within Cardano. The transaction fees are so low. It's already a staking atmosphere. I think the Cardano ecosystem would understand that more so than the guys in the ERC20 system.
Yeah,
you know, the round trip fees on going into an LP of a stake pool in Ethereum right now is gargantuan. You can't just do it with $100, $200. You're going to be paying that just in TX fees alone. But Cardano's low transaction fee ecosystem is definitely lends itself for smaller players to gain access to this kind of a play.
It's good for business, and this is actually something that it's a business decision. That's one of the reasons why I chose to do business on Ergo and Cardano. Yeah. It was a business decision, and lower transaction fees are I mean, it's an obvious plus, and also a audience that doesn't have a huge barrier of entry can basically at least conceptualize, okay, instead of earning token X, you can actually earn Kinka tokens, which are backed by gold. Pretty much 99% of all the people that are staking right now will get what that means and be super excited about it.
Yeah.
So yeah, I think the opportunity.
Marketing one post into especially if we partner with somebody that's already out there with a bit more following. Most of our followers are traditional guys. That's a big move into Cardano. I think it's a good move. Already we're getting so much traction, so much recognition for what we're doing. And just as a little guy, we're just getting started.
No, I think you're going to have a lot of success in the ecosystem. I think you have the right attitude. I think you have the right product, and you have the right kind of business sense to really make it, to make it sustainable. And well, listen, unfortunately, we're gonna be wrapping it up soon for this episode of the Mainstream. But before we go, just wanted to let the audience know, or if actually you would like to let the audience know, that you're going to be on a space in just a little bit, right?
Yeah, we're all three of us. We're going to be on MinSwaps hosting it tomorrow night, roughly the same time. We'll be posting that. That'll be a bit more interesting. Let's see how it goes. That'll be grilling me on the harder technical question, I'm sure.
But wait a second. I didn't grill.
Nice and friendly here, but I'm expecting to get grilled tomorrow.
Where were you on the night of January 31st, 1897?
Yeah, exactly.
Yeah. All right. I see how it is. I should have grilled you more on anyway. Is it real gold? I mean, really? Yeah, are you sure there is no chocolate inside? No chocolate. Listen, I'm used to gold coins with chocolate. Okay, I'm Jewish. We get those things for holidays. If it doesn't have chocolate, I kind of feel cheated. I just have to throw that out there. I just do. I'm sorry. Okay, I can appreciate it, but at least one of them has to have chocolate in it. Okay, can you promise me that at least one will have chocolate?
A little Kinka logo for you.
Thank you. Okay, just get me some chocolate Kinka gold coins for Hanukkah, and we're gonna be good. We're gonna be great. Anyway, Chris,
I will see you tomorrow.
Thank you so much for coming on the Mainstream. I know we gave you very short, very little notice, so thank you so much for coming on. Super excited about your project. Guys, please check out Kinka Gold. Soon to be everywhere around Cardano. You can see the their Twitter handle down there there. Yeah, right there. Yeah. Okay, thank you. It's easier for you. Yeah, right there. So follow them on Twitter. If you see Chris at one of these events, say hi. He's a cool dude. He speaks Japanese. And he makes a fantastic frittata.
We'll be at the Cardano Summit as well in Dubai later this month.
Yeah, yeah, and so will we. So
Yeah.
will we. It's the royal we. So will I.
Yeah.
Anyway, guys, thanks for tuning in. Thank you,
Thank you.
Chris. And hey, everybody, once again, this is Dan, barely alive, but still kicking from Japan, signing
Thank you.
off.
See you guys. Thank you.